Players get paid to play, true, but that is only half the story. Behind every big smile on a billboard sits a second paycheck. It is called image rights, and it can outgrow the game wage by miles. Growing up in Manchester, I watched my family stretch every pound. That taught me to read the small print. In football, the small print is gold. Here is the core idea. Your club pays salary for playing. Separately, the club buys a license to use your name, photo, and likeness in ads, media, and merch. The UK tax office even spells it out. They say they are concerned with arrangements involving payment for image rights when there is also employment. And they warn there must be commercial justification to split pay between performance and promotional services. In plain words, if a club pays for your image, you must actually promote. Today, I will show how that works in real life. We will go step by step: wages versus licenses, image rights companies, club deal terms, sponsor conflicts, taxes, and why transfers stall. I dug into actual contracts and tax rules so you do not have to. Welcome to Kickin' Riches. Quick win for you: when you see an image rights clause, you are looking at hidden money. Would you accept a lower salary if you could earn big on image deals instead? Next up, how players package all this through their own companies. Think salary is everything? It is not. There are two streams. Salary pays for performance. Image fees pay for promotion. Two contracts, two incomes. Here's how it plays out. The employment deal covers training, matches, and team duties. It can also require some promotional work as part of being a club employee. The tax manual even notes the player is employed primarily to perform duties for the team, and the contract may also add requirements in representation of the team. But the image license is separate. That license lets the club put your face on posters, drop you in commercials, and push you on social channels. The UK guidance adds a guardrail. They say there must be commercial justification for splitting performance pay from image pay. No promotion, no image fee. In practice, this split is huge. Lists like Forbes show some stars earn at least twice their club pay from endorsements alone. Think of a simple ad deal. An ice cream brand pays for your name, your smile, and a few shoot hours. That money is not wage money, it is image money. That is the base of the pyramid. Now the big twist. Who actually handles the ad checks and sets the price? We dive into the player's image rights company next. It is wild but true. Many players build a company just to manage their own face. Sign for a giant club and you might see a new entity pop up the same week: My Name Limited. It sounds flashy, but it is mostly smart business. Why do it? Control and clarity. The company can license your name and image to the club, to brands, and to media partners. It can bundle different markets, keep neat records, and reinvest profits in staff, content, and legal. There is also tax planning. Company profits are often taxed at lower corporate rates than a top personal income rate, depending on the country. But that only works when the work is real and valued fairly. The UK tax office is blunt. If there is a deal between a club and an image rights company, there must be commercial justification for the split. Put simply, show the shoots, the posts, the appearances, and show market value. No proof, no pay. Top stars arrive with a ready-made brand book and a price list. That signals value and speeds talks. The company sells usage, the club buys usage. Simple. So the company sells the license. But what exactly can the club do with your image once they buy it? Let's map the limits next. Club ads, jersey drops, glossy posters. It looks free and easy, but it is not a free-for-all. The contract spells out every lane. Categories matter. Clarity saves fights. A typical license lets the club use your image in kit launches, match posters, program covers, stadium boards, the club website, and official social channels. That is the core. Then come the edges. Retailer promotions with partner stores may be allowed, but often within a cap. A special capsule tee with only your face might need a separate sign-off. Video game inclusion may ride on league or union deals. Every carve-out lives in writing. Competitor rules sit right beside. If the club's kit is made by one brand, they may limit you from doing splashy activations for a rival inside official club content. You can still have your own personal boot deal, but not every club channel will show it. The same goes for main sponsors. If the shirt sponsor is a bank, you may be barred from fronting a competing bank in club shoots. One more layer. How often you show up is money too. That brings us to the count that players feel in their calendars. Mandatory marketing days. Let's unpack the season grind next. Vacations sound nice. For top players, many days turn into sponsor days. The calendar rules the cash. Clubs and brands buy time, not just talent. Most first-teamers owe a fixed number of promotional days each season. Industry norms sit around 10 to 15 days, spelled out in black and white. A day might be a kit shoot, a hospital visit, a sponsor clinic, a retail signing, or a content day at the training ground. Sometimes a social media push counts too. One post might equal a half day or a preset fee, depending on the deal. Each deliverable has timing rules, approval windows, and usage limits. Miss the day and there can be penalties or a make good later. Value scales with fame. A global star's one day can be worth a fortune to a shirt sponsor. That is why the schedule is tight and the call sheets arrive early. Smart players track every hour, tally the days, tally the posts, tie them to invoices. Paperwork beats panic. So far, so tidy, but life gets messy fast when logos collide. Club partners, personal partners, and national team partners often live in the same categories. When brands overlap, someone pays or someone backs off. Sponsor clashes are next. One shirt, many bosses. A player can juggle a club kit partner, 3 personal sponsors, and a national team deal at the same time. Sounds fine until 2 logos aim at the same space. That is when the clause earns its keep. Most contracts carry non-conflict rules. If your club wears one brand, you cannot front a direct rival inside club content. If your personal deal is with a soft drink, but the club has a different soft drink on the training ground, the club wins on club time. National teams add another layer. Country camps often forbid any personal branding in federation shoots. Some deals build carve-outs, some include buyouts, and some pay you extra to give up a category for club use. Priority rules decide double bookings. Late approvals trigger reshoots or extra fees. It is a puzzle, and the edges matter. Smart agents map categories early: apparel, footwear, banking, airlines, beverages, tech, betting. They draw red lines, then price the exceptions. Less friction, more money. If this money game behind the game is your thing, hit subscribe and tap like. It helps this channel grow and keeps videos like this coming. Now, you have seen clashes on the pitch. What about the ones in your console? Here is how video games license players. Gamers know the feeling. You load a season and see a team called Man Blue or Man Red. No, your game is not broken. That is licensing at work. Here is the chain. Many games license players through leagues, federations, or the Global Players Union. That union deal gives access to thousands of names and faces. Then the publisher signs separate deals with certain clubs or leagues for badges, kits, and stadiums. Sometimes a famous player or a club sits outside a master agreement and negotiates directly. If a club, league, or nation is not licensed, the game uses a generic name and basic kits. That is why a roster can look real while the crest looks off. It is not a glitch, it is a gap in rights. These licenses matter because they set how far a brand can push your likeness. A union deal might allow your name and number. A direct club deal might unlock high-detail scans, classic kits, and special modes. More rights, more marketing, more money. You can now see how many hands touch one face, and all those hands want a fair cut. That brings us to the part that makes or breaks the plan. Tax. Let's keep it clear and high level. Think top-rate tax at 45%. Now picture a second stream that might be taxed inside a company at a lower corporate rate. That gap is why image structures exist, but it is never one size fits all. In the United Kingdom this tax year, income above roughly £125,140 falls into a 45% bracket. Corporate profits for many companies often face rates in the teens or low 20s, commonly around 19 to 25%. Some countries create special regimes. Spain's well-known Beckham Law once let qualifying foreign players pay about 24% for several years. Italy and other markets also offer special rules for new residents. Residency matters, timing matters, the type of payment matters. Here is the warning label. Tax offices say any image fee must be commercially justified. If a setup looks like disguised salary, authorities can reclassify it and charge back taxes and penalties. That is why top players hire specialists and keep tight documentation, from shoot schedules to approval sheets to invoices. I am not giving advice here. I am sharing the map so you can see the terrain. Now the final twist. Get this wrong and you do not just pay more tax, you can lose a transfer. Let's talk real-world disputes. Dream move agreed, medical done. Fans refresh feeds, then everything stalls. Many times the hitch is not salary or bonuses, it is image rights. Clubs need clear licenses to use a new star in global campaigns the minute the deal is announced. If the player's image rights company has existing commitments that clash, or if the old club's license still holds certain categories, the new club cannot press publish. No license, no launch. Agents and lawyers then sprint to unwind old deals, rewrite territory limits, and set new approval rules. We have seen high-profile moves delayed while image clauses were thrashed out. It sounds fussy, but imagine a shirt sponsor paying millions and not being able to show the star on day one. The risk is real. There is a second trap. Weak paperwork invites audits. Over-aggressive structures, vague scopes, or using the wrong entity in the wrong market can trigger fines. The fix is boring but vital. Clear contracts, fair valuations, and tidy records. Paper beats panic. You now see why image rights sit in every big headline. They are not fluff, they are fuel. We have pulled the curtain back. Let's wrap with what to remember and how to use it. Most people think salary tells the whole story. Today we proved the second career that lives inside a football career. When a club buys your image, they buy access. When you license it well, you buy options. Done right, image rights can make you rich. Done wrong, they just make you busy. Here is your checklist. Separate salary from licensing. Use a proper image rights company when it fits your life and your country. Define categories. Count marketing days. Watch for sponsor clashes across club, personal, and national team deals. Keep clean paperwork. And always remember the tax warning label. Commercial justification is king. I grew up in a house where every pound had a job. That is why I love this topic. Money is the tactics board most fans never see. On Kickin Riches, I break the game down so you can see every move and every risk. If this helped, share it with a friend who loves both football and finance, and hit subscribe for more deep dives like this. Thanks for watching. Would you rather take more guaranteed salary or more freedom through image deals, even if it means more work and risk? Tell me below and I will read every take.